Mark Collinsworth with us again here today from Vere Global after another scary day in the market. You must be getting tons of calls from your clients. What do they want you to do, and what do you advise them to do, Mark?
Well, thank you, Larry. Today was another down day in the stock market, and we actually had a lot of people calling today really starting to panic. This is the first time we've seen here in about the last 20 days that clients have actually starting to really get worried. They're starting to panic. To a certain degree, that's actually a good sign, because usually when people get scared, that level of comfort disappears, and that usually is a sign that you're actually starting to get closer to a bottom in the stock market.
But they're probably, a lot of them are probably wanting to cash out, correct? They're saying go to cash on everything.
Correct. That a lot of them want to go to cash, and I think that's kind of the wrong strategy right now for several reasons. This stock market, most stock market declines, bear markets, normally average about a 33% sell-off. This one has only seen about a 27, 28%. So you basically took what a normal bear market takes about 9 months to go down 33%. You got the almost the 33% here in 22 days. So you don't want to sell out.
So you're saying because it's dropped so much so rapidly, that means that the bottoming out will come sooner?
I believe so. Since the decline has been so quick, I believe the bottoming process will come quicker than what a normal bear market takes.
But Mark, how do you reassure a client who was watching the news today, watching the press conference with the president again, and they're talking about, who knows when this is going to end, but we could be in this pandemic for 18 months, everything is going to be shut down. People must be saying, well, it's the end is nowhere, the bottom is nowhere in sight. It's going to get worse and worse and worse, especially now that they're admitting more and more that they really don't know a lot of critical measurements about this virus, that there's a lot of unknowns. So they don't know how contagious it's going to be. They don't know how fatal it's going to be to how many people. The news keeps getting worse and worse. So how do you make clients more comfortable? How do you reassure them?
Well, one of the interesting things I've also noticed with clients, that just talking to them, is I always tell them you always want to be invested in good stocks that sell a good product run by really, really great management teams. And a lot of clients look at the stock market and they think because they own stocks, their portfolio is going to follow the stock market. That's totally incorrect. Give you a few examples. Some of our larger positions that we've bought in clients' portfolios over the last years. Amazon was actually up 1.23% on the day versus the stock market being down 6%. Netflix, which is another stock we've been buying, it was only down 1.3% on the day. So that kind of proves good companies run by good management teams can really get you through these uneasy time periods.
And as we've mentioned the past few days, if it's a good stock that performs well, if it's a product or service that's going to remain in demand despite a recession or even a depression, it's good to stick with that stock.
Absolutely. And the most important thing you got to remember, the stock market's kind of like its own war. You want the best generals leading your armies. The CEOs of Amazon and Netflix, they're probably the best CEOs in the industry. Right now, they're trying to figure out ways how to make money during this crisis.
And some of them already have a game plan, right? I mean, with Amazon especially, people are buying so much now online. They just hired, 100,000 new workers.
Correct. They just hired 100,000 workers. They are rearranging their supply lines a little bit to get stuff faster to people. They're being very creative in how they do that. Companies like Netflix and so forth, they're actually knowing more people are going to stay at home. They're actually movies they're planning on releasing in maybe May. They're actually releasing them this month to try to entice people that don't have an account that's staying home to maybe sign up for those subscriptions.
All right, let me play the extreme alarmist here. Let's say I'm convinced that it's not only going to be a recession, but an actual depression of 1929 level. The good stocks that you're talking about, those good companies that always perform, if it is a depression, will Procter & Gamble, for instance, still be selling paper towels and toilet paper in the amounts that they are now if it's a depression?
Well, to answer your question, if it actually comes out to be a full-fledged depression like the 1930s, you actually run into a whole brand new problem, is that those companies like Amazon and Netflix are doing well now because so many people have money in their hands to spend at those companies. During the Depression, even though you had great companies, there was no one buying their products because everybody basically was struggling so much just to put food on the table, that farming and things of that nature. I don't think we'll get to the problem of the Great Depression. There's been numerous safeguards put in place to actually stop an event like that. And plus the government is actually is starting to put more money back into the market right now. So they're being much more proactive than what they were in 2008 and even more importantly in the 1930s.
So therefore, if somebody's still thinking of going to cash, what happens to that cash and how much interest could they possibly make? And where does the cash sit if they go to cash?
If you go to cash, it's basically going to sit in a money market account and earn about 0.2% interest. That's why I tell people that are more income focused, people that need bonds. I wouldn't buy bonds now because bonds have gotten just so overvalued. The 10-year Treasury bond is trading at 1%. Inflation's running at 1.2%, so you're guaranteed to lose money on a 10-year bond right now. But if you look at some of these high quality companies like AT&T, which has like a 5% dividend yield, you look at stuff like Philip Morris, that makes cigarettes, that pays like a 5% dividend yield. You can get your income stream from stocks, a little more volatile, but at least that will satisfy your need for monthly or quarterly income.
Well, let me press the cash option a bit more here. Now, if somebody still wants to go to cash, they might be asking, can I really access my money, or will the bank stop, freeze it because of the financial straits that we're in? In other words, will you be able to get your cash money out of your money market account or out of your bank? Is it a possibility that you can't get the money out if it gets worse?
I'm going to say it would be possible. There could be a situation to where the system freezes up so bad that you can't even get money. You can't even walk into the bank and get money. Now, I will say that's highly unlikely. You'd have to see a situation that would actually be almost 100 times worse than the Great Depression for something like that to happen.
Really? So for those who say, I don't really trust the banks, I don't know really if I could get my money out if it gets really bad, I'm going to put it under my mattress. How about that option?
Well, if you put your money under the mattress, yeah, it might be safe, but just from inflation alone, inflation is going to eat away at that money. So even though it's under your pillow, inflation is going to make it. If you have $100, well, if inflation is running at 1%, a year from now, that $100 is only going to be a value $99 worth of goods. The year after that, it's only going to be a value $98 worth of goods. So you're losing money by putting it under your mattress.
And even if you leave it in a money market account, it's not keeping up with inflation at what, 0.2% interest?
That is correct. That is
All
correct.
right. So once again, Mark, it looks worse and worse for a lot of people. Investors are getting increasingly nervous. Again, what is your advice to them as a closing comment?
I would say stay the course. The U.S. economy and the global economy has gone through a lot worse situations. Great Depression, World Wars, it always comes back. You just have to have the patience to stay in it. And that's the secret that separates great investors from good investors. The stock picking skills are the same between the two, but the great investor really understands patience and understands discipline, not to panic when everybody else is.
All right, another closing word that's full of hope and reassurance. And from your track record, you know what you're talking about, as far as I could tell. And we'll see what happens, and we'll be staying in touch with you all during this ongoing volatile situation. So, Mark Collinsworth of Vere Global, thanks once again for joining us.
Thank you very much.